Hi, everyone. Happy Thursday afternoon. Welcome to Tech School Live. If you're joining us via live stream, we're really excited to have Kristen Ford with us today. We had such a fun prep session, chit-chatting about finances and startups and naughty things that we all do that Kristen's going to help us not to do. Are you going to do a little intro, Stephen, before we jump into Kristen's?
Sure, I can do that. Yeah, thanks everyone for tuning in. If you're tuning in, live on Zoom, or if you're watching on YouTube live, thanks for joining us. If you are watching on YouTube, whether it's live or recorded, feel free to give us a like, give us a comment, subscribe. All those likes, all those comments that we get, whether it's you leaving your thoughts or asking a question or whatever that may be, helps push our video out to more people. So all these interactions that you might leave could help this video be pushed out to an entrepreneur or a mentor who really needed to hear the message that Kristen's sharing today. So I'll leave you with that and hand out over to Kristen.
All right. Well, thank you. And thanks very much for having me. Just a brief background about myself. I actually participated in one of the focus, actually two of the focus cohorts. I guess it's been 2 years ago now since I met Curling and Johanna. And as many of you already know, these are fantastic people who really care about the startup community and are great resources. So I'm happy to be here and help give back. I have spent the past 20 years as a finance professional and entrepreneur. It's this background that led me to develop Holistic Office, which we're not going to talk about today. So, along this journey, I have helped probably about 20 different companies and nonprofits with their books, including, leading my own companies and projects and things of that nature. And so I was asked to come on board today to just talk a little bit about, for all of you guys getting started, everybody wants to make money and they think, cool, money's my finance, and off we go. And I'm just here to kind of help you guys start off on the right foot so that you will save money over time. You'll have better information about your company and its financial health. And you'll have a better guide to get you started. What I didn't mention, and I probably should have, is that I frequently come into companies when they are experiencing transition or some kind of a crisis. And it almost always invariably ends up with very big bills to clean up messes that were completely and totally unnecessary. And I've worked with, like I said, about 20 different companies at this point. And it's never a pleasant experience for them. And I've probably run across just about everything you probably shouldn't do, and a few things that actually turned out pretty darn good. So with that being said, when I first got started with this, I had reached out to some of my colleagues about some of the things that they felt, every business owner should know. And what it really came down to is we decided to kind of go really back to the basics. And every one of my colleagues, the first thing they said is that you should know how to read a financial statement, okay? And another thing that every one of my colleagues, including myself, agree on is that setting up your books properly and developing good habits from day one is paramount. And so it sounds kind of daunting, but the truth is I've been able to distill it down to a few things, and I've put together a resource page for people going from just like, hey, I've got an idea and I'm starting to spend a little bit of money on it and need to track expenses, to people who have some revenue coming in now and they're actually bringing on some employees. And I really tried to focus on resources and tips that will allow you to grow, so you don't have to have big changes in your software when you do start to grow. Things will grow with you. That's probably another area that I see companies really have issues with. They start off with maybe an obscure piece of software, or they start off with a process that is very hard to then either scale or transition into a piece of software that is more usually used with finance professionals. So, and then I probably think that the the last thing I want to touch on just briefly, because I know I probably have 3 days worth of conversations here. I'm going to cram into 20 minutes. And so the last thing I want to just touch on is the type of finance professional that can help you out early in your process. So probably, you know, one of the things that I wanted to share with you guys is when you're getting started, the very first thing I want you all to start doing is collecting your receipts, okay? and you can organize it in a lot of ways, but there is a free app that you can use on your phone called Expensify. And Expensify is free for up to 25 receipts a month. And it will store it for you. You can categorize it right from your phone, and you just take a picture and you have a copy, and you've just been able to, you can pull a report from it, super easy, and you're going to be immediately compliant with keeping copies of all of your receipts. And so when you are ready to talk to a finance professional or your tax accountant, you just can literally pull everything out and all the support documentation with almost no trouble whatsoever. So it saves you time, saves you money, great place to start. The second thing is when you start getting these reports, and let's say you start getting a little bit of revenue too, and you want to start actually setting up some books or using some software, I would recommend something like Quicken, okay? And Quicken is anywhere from $36 a year for basic accounting to a professional situation where you're actually invoicing, and that's $84 a year. Cheap. And it's great. It's another piece of software that will grow with you and help you to actually start tracking your finances. And it will set out reports that are easy for your finance professional, your CPA, whoever that might be, to understand. So I think what I want to do is I want to jump into setting up books, okay, and how that can work. So, and I think the way to best do that is I want to share with you guys, I want to share with you a good set of books and reports and a bad set. And I'm going to show you just a little bit why I think one is good over the other. And so let me just share my screen here. Okay, so here is our good sample. There's 3 types of reports that you should always take a look at, okay? And the way these reports read is going to depend on how you set up your books. So everything in this report, you can see over here, let's make this a little bit bigger for you guys. We have, this is what's called an income statement, also called a profit and loss, and it will show you all of your income and your expenses, okay? And what I like about this is everything you see over here, okay, in this area that I'm highlighting, this is actually your chart of accounts. And if you don't know what your chart of accounts are, when you set up your software, the first thing they're going to say is what kind of income and what kind of expenses do you have? And you know, and what kind of assets and liabilities do you have? And then each one of those gets its own chart in the chart of accounts, or they also call them general ledgers, okay? And what's really cool is that all of these pieces of software are going to give you some guidelines to get started. So if you sell something and you have inventory, they're going to give you some books that are already set up for inventory, you know, and then you can start from there. And they're usually grouped together in certain ways. And the reason why I like this particular set of books, we can make this a little bit bigger here, is that this is set up, you can see these numbers over here. I am a big fan of numbering your chart of accounts. And the numbering is important because it also helps to identify what type of account it is. So these accounts, this one, everything in the 4,000 range, these are all revenue accounts. So we know when we see something like this, this is one of my revenue accounts, okay? and then we label them well. We know what these are. These are our Amazon sales. These are our discounts. These are our regular sales from our store, okay? So these are well labeled and they're grouped together nicely. And usually right under that are your cost of goods sold. For anybody who doesn't know what cost of goods sold are, this is the inputs, the money you spend on actually making or giving your service, okay? So if you, like this particular company here, they actually have finished goods. So it's pretty easy to put in their cost of goods sold. If you have, say, maybe a service company, a company I worked with before, they supplied home health care services. So for them, their COGS was the actual payroll cost of their home health service aides, okay? And this is important because when you come down here, you get a gross profit, okay? That's based on just your inputs for how you sell, make and sell your product against your revenue. And from this gross profit, you can create something called a contribution margin, which would tell you what percentage of your revenue is being used just to make your product, okay? And this is a key indicator that a lot of people will ask for, right? So if it costs you more to make your product than what you are actually bringing in revenue, that's a real indicator that we have a pricing problem, or you're spending too much on your inventory, and everything else doesn't matter because you don't have any money left over to pay any other expenses. Okay, so kind of important to know those things. And again, everything in the COGS is in the 5,000 range. So we know it's just an easy way, a key to kind of find how, which of these revenue lines are impacting you and how, and expense lines. The bottom half of this, these are all of your expenses. And again, they're kind of grouped together. And this is for you can be a little bit more creative on how you want to do that. One of the things I see people do quite a bit is they're getting started and they want to track every single expense, which they should, but they also want to do it in their books. So instead of having maybe office expense, which might include your office supplies and maybe the treats that you have, for your break room that you're expensing or whatever, they'll tend to put a bunch of lines in there to track these types of things. And at the end of the day, they don't add a lot of value, and they make your reports harder to read. And I think that it's something I see, and I'm going to show you that kind of in the bad example. But here, they put everything together. They've got their automobile expense, their bank charges, their bad debt and write-off, which is something that on another day we can talk about why this is important, because not everybody pays and we need to account for that some way. Here's their freight, their business, other business expenses, computer expenses, insurance. This is everything that goes into running your company, marketing. Here's that office expense I told you about, your payroll expenses, all your professional fees. There's a ton of information in here, okay? And you can see all of these things have to be accounted for, and they help run your business, but you got to have money left over to run it, okay? And then we come down here, and here's our other income and expenses. And for this company, this is where we put our provisions, where we plan for the taxes that they need to pay, okay? Tax planning, super important, multiple taxes, you probably should know. Let's see here, we've got some stuff in the chat. Okay. So this is what an income statement looks like, and it literally is your income and your expenses. Your balance sheet is another report that is imperative that you understand and learn how to read. And these are your assets and your liabilities. And basically the balance sheet is what tells banks and investors what the value of your company is, okay? And so This is all your cash on hand. These are your receivables. You know, as you guys get started, you're going to find out there's all these different ways you can be funded. And one of them is on the value of your receivables. Okay, so if you've got a bunch of money coming in, it's a great way to leverage that and get non-dilutive funding, which means, you know, you don't have to give up any equity in your company, and you can get the capital that you need. So there's some great, you know, resources for that. And then we have other types of assets, right? These, in this particular company, they have an inventory. They also prepaid from some supplies and some rent, some leasing costs. And basically you get all of your current assets. These are everything that is basically, you can liquidate it within a year. And then you have fixed assets, and these are your furniture. This is depreciation against your furniture and equipment, all that kind of good stuff. And then you have other assets, which might be retainers, reserves that are kept. And these are your total assets. So this company has nearly 1.6 million, you know, in this particular month of assets. And then you have your liabilities and your equity, and these are always going to match. So this and liabilities plus equity is always going to equal assets. And I know I'm going fast through all of this. So, and I'm sorry if I'm having you all glaze over. I want to kind of move on to a few other things here. But in here, this is everything you owe. So here's all the bills that you owe. Here's your credit cards that you owe, and anything else that your company might owe. And then here is your equity. And this particular company is a corporation. So what you see in here is common stock, retained earnings, things of that nature. If you have an LLC or if you're a sole proprietorship, basically, you know, your equity is the money you've put into it, and you owe, you know, you own all of it. So if you have an LLC, you might see percentages here. But again, this number, this matches this number. And this report is what every financial person who wants to give you money or is considering giving you money is going to look at first. Okay. And then the last report that you really should learn how to read and use is a cash flow statement. So for me, every person needs to set up a budget, and then you need to set up a cash flow report on how your money is going to go for the next 13 weeks. So, and you know, you might be saying, well, you know, Kristen, I don't really have anything going on here, right? You know, I have a small business too. I have a small pot of money that I'm putting into my app, and I still have a budget. So I have maybe, you know, $20,000 that I'm budgeting. This much is going to development. This much we have to put aside. And then I track how I'm performing on that, right? What am I spending to my budget? So understanding these types of reports are very important. When I say that when I have reports that I don't particularly think are great examples, this is one of them. So this particular profit and loss, there's no numbers, nothing's really grouped very well. When you're actually trying to organize your receipts and your income, it's really easy to put it into the wrong place. And this particular company, I think the last time I counted, had 3 different places where they were tracking telephone expenses, right? So really easy to get it in the wrong place, and it's not adding any value, and it makes it really hard to read, okay? So organizing it, and again, this is how they set up their accounts. This particular company, kind of to give you some reference, so we have 168 lines here. This is a company that had revenue of 2 million, and that was really it. My Nice Organized company has revenue of over 6 million, and they have fewer line items that they actually track. So being organized and really trying to understand your business, this is your way to show other people what your business is doing, and to really keep everything, you know, on track, organized, and easy to read. The other thing about this particular report that I don't like. So when I came into this company, the previous bookkeeper, this is one of the reports that they made. So learning how to use Excel is pretty important. This particular report, I can't sort, I can't do anything with the way that they have put this together. Okay, I would have to go in and rebuild this whole report. But what's even worse is that this particular report, when I look at these numbers are all hard coded. They didn't come from QuickBooks. They didn't come from another report. Somebody tabulated it and then they stuck it in here. And the problem is that when you're looking at this and you say, geez, you know, how come my cash sales were $100,000 less from quarter 2 to quarter 3, right? I can't just go into the books and create a report like this, okay, and dig into it and tell them, because this number I have no backup for. I don't know where they got it from. It's not matching anything, you know, so be really careful when you are making reports that you can pull them right out of the software that you're using, and you don't have to manipulate very often, because then it's super easy to actually keep track of what's going on. So these are companies, I know you guys are, some of you guys are just like, geez, maybe I just have an idea. I'm not even here yet. This is something that as soon as you set up anything in Quicken or any piece of the software, you can run a very quick report on, even if it just tells you, I spent this amount of money last month and this is what I spent it on, okay? So it's just something to kind of keep in mind. The other thing about reports like this, and one of the reasons why I recommend using some pieces of software early on to get started, especially inexpensive ones, is that all of this software now, you can actually attach reports, memos, spreadsheets, all kinds of things. So I wish I could just show you some of my books, but I can't. But, you know, very often, you know, developing these good habits at the very beginning is just going to save you a ton of time later. So if you start off with something like Expensify for your reports, or you set up Quicken and you put your expenses in there, great. The other thing I'm going to recommend to you is label everything, because as you are putting things into your books and you're starting to keep track of it, you go, oh yeah, I remember that. I had lunch with Curling and it was great, and I'm gonna expense that meal, right? And then you're going to go back and you're going to see this expense and you're going to say, what the heck did I do on that day? And why did I do that again? So when you're putting things in your books, label it, okay? Because I can tell you, as somebody who, you know, your finance people leave, you forget things, and then you bring in a new person and they're looking at this and they're going, what does this mean? And like, this report is a great one. When I went and looked at this report, when I came in, not one of these numbers matched anything in their books. I had absolutely no idea where he pulled this information from. And this client ended up paying for me $500-600 just to redo reports. Okay. and it was an iterative process, just trying to figure out what they wanted to see and what were the indicators that were important to their business. So, and those are things that you need to decide, you know, so this is kind of a really, you know, quick dive into some of the things that you all should think about as you get started, right? I want to leave some time to kind of answer some of your questions. I'm gonna jump over real quick to some of the resources that I've put together, and I'll make sure that Curling has this available for you all who are getting started. And I grouped them by people who are just getting started. You don't have a lot of money. You can't afford somebody to help you. So I chose these 3 for just starting out. So Expensify, we talked about. It's free. There's all kinds of great things about this. And what I like about it, and I have kids that are probably only about 5 years younger than you all, and I know you're living on your phone. So what's really awesome is that most of these you can now do on your phone, okay? So Expensify, you're out somewhere, you take a picture of that receipt, you got a copy, you're good to go. And when you're ready to go into something like Quicken, you can actually integrate it into Quicken, okay? So you just automate that information and it just bumps right on in there. The less time that you spend having to manually put stuff in, the more time you have to work on selling your product, right? Working on pricing, avoiding some of the multitude of mistakes I see on a regular basis. I also was asked a little bit about, you know, what would I recommend for people to read about finance? And, you know, finance is dry reading. It's something that you kind of have to do. And what I realized is that I don't really have a book per se, but I do love nolo.com. So it's just kind of a favorite of mine. You can get forms, you can get all kinds of information, everything from HR, you know, to setting up your books, like how do you do it? So should you do cash accounting versus accrual accounting? And I can tell you, as somebody who does a lot of this, most likely as you get going, you're going to want to be accrual accounting. And we can have a whole other conversation about that as well. But it's something to kind of keep in mind. And so you can always start out as cash, especially if you're a service type business. But I think as soon as you start realizing that you are growing a little bit, start making those changes as soon as you possibly can, right? Because it's just super expensive when you're making 2, 4, 6 million a year, and now you have to go in and switch everything. It is a big deal. Okay, so for people who maybe have revenue over $100,000 or you're hiring people, I think that's when you go into QuickBooks. Okay, it can be desktop or online. If you're really entrepreneurial and you got 3 or 4 or 5 companies, do desktop because you don't have to pay more for that. But online, you pay for 1 company per subscription. For timekeeping, I recommend T-Sheets. There is something called Gusto, which gives you HR help for as little as $25 a month. We're all here in California. At least I am, and Curling and these guys are. California is, people like to say it's a hard place to do business. I don't think it has to be hard. And these types of resources right out the gate is going to help you avoid pitfalls that get really expensive. Okay, really expensive.
Don't forget that San Diego has a free HR hotline. They give you the same kind of help, only it's free.
That's right. I forgot all about that. You can do the same thing. So something like Gusto, this is also going to process your payroll and have a self-service portal as well. Yeah. So you're right. Getting HR help is super important, and always being compliant is very, very important. Don't take unnecessary risk. For somebody who maybe has 5 or more employees, because I think we might have a range on this call, you might want to consider a PEO. PEOs are a little bit different. You make an actual agreement with your payroll company, and your employees are actually their employees, right? As far as, you know, payments concerned. And for somebody who doesn't want to deal with the multiple things that go into hiring people, like workman's comp and benefits, and how do I even write a job description, onboarding them. There's probably 15 pieces of paper you're supposed to give somebody when they become, you know, an employee. Something like this can really be beneficial, right? And it's something to consider. The last group of resources that I have put in here is for security. One of the things I frequently see is that people are putting sensitive information about payroll, about HR, about your books, all of your passwords, and they say, hey, Google Drive is free. This is awesome. But guess what? Google Drive is not encrypted. It's easily hackable, and you can be on the line for a data breach, and you just don't want to do that. So something that's really inexpensive, like Boxcryptor, can be used with this Google Drive and Dropbox and over 20 other file storage groups or apps. And it literally encrypts all of your documents right then and there. So even if you're hacked, everything's encrypted, okay? So, and then the other thing that I really recommend, especially in the age of COVID and everybody's working remotely, is using electronic signatures whenever possible and managing that process. So HelloSign has free electronic signatures. So you're just getting started, you got a new customer, you want to send them a contract, you want to send them, whatever, you can send them an electronic signature and have them manage that process, and you get everything back in a nice, tidy PDF. And then DocuSign is when you're really up and running and you have lots of contracts, vendors, employees. It's just a great service, and it's just something that helps your process. So some tips. Make a budget. Number one, save your receipts. As quickly as possible, use some accounting software, okay? And if you want to start with something that is not accounting software, use a spreadsheet whenever possible. If you don't want to use a spreadsheet, like I know Johanna has got some great ideas on how she uses some apps, just make sure you can export any of that information into some kind of a CSV or Excel file so that it is easily imported into, accounting software that will help your company grow. Secure your documents and apps whenever possible. It's just data breaches they can be really costly now, and you don't want that to be you. And don't overtrack, okay? My example here, splitting that phone bill among 3 different, classes, it rarely gives you any insight into your company health. And it takes a long time to parse all that information out, right? And I'm gonna end with the full charge bookkeeper. So I want you to automate as much as you can. The easier you make this on yourself, the more in compliance you're going to be, and the better your books are going to be. I can tell you I'm working with actually a nonprofit right now that they did not have the right professional helping them, and their books basically have been meaningless for the past 2 years. And I mean, overstated by hundreds of thousands of dollars in one place, understated by hundreds of thousands of dollars in another place. Just, if they had automated some things, they put some best practices and processes in place, they would have been in a lot better. And then I want you guys to be reviewing your finances at least weekly when you're getting started. The more you know about your company and your finances, the more you're going to be able to work with a professional, and you're going to be able to manage them. I run into business owners all the time. I hate finance. I don't want to do this. Well, it's at your own peril, because somebody else will do it for you. And if you don't know how to even read what's in your books or your financial reports, somebody else can take advantage of that. And why I really like to think that, people are great people. When it comes to money, you have no idea who you're dealing with. The nicest person in the world can just change on the drop of a hat. And early in my career, I was actually a financial planner. And I can tell you, every time we had these meetings about financial planners who ripped off everyone, every single time you'd have this person going in there, oh, he was just the loveliest person, or she was just like family to me. And meanwhile, they were just fleecing them because they just didn't know. So the last thing is I put in here that a qualified full charge bookkeeper is going to save you money. There's all kinds of financial professionals out there. Everybody knows what an accountant is. Everybody knows what a CPA is. Everybody knows what a bookkeeper is, but there's all these nuances, okay? So a full charge bookkeeper is somebody who has done bookkeeping and managed processes, all the different processes, accounts receivable, the money coming in, accounts payable, the money coming out. They can run reports for you. They know a lot about the entire accounting process, especially for a small business. And they frequently will be the only person in a small business that is helping you. And they're a little bit more money. I probably say if a good qualified full charge bookkeeper is going to start at, 30, $35 an hour. But I can tell you that spending $70 on 2 hours on a good full charge bookkeeper to set up your books and maybe once a month looking at something is going to save you money in the long run. Because once you get going, and I'm optimistic everyone's going to be really successful here, right? And coming in when you're making 800,000 a year, 900,000 a year, and then figuring out that you're not really making any money. Everything's a hot mess. And now you're going to spend $10,000 for a bunch of professionals to come in here and try to straighten it out for you. And it's going to take a ton of your time away from doing what you want to do, which is, running your business and selling your products. So I try to keep it fast. I know this is just a big dump of information, but there's about 20 minutes left. And I thought maybe this would be a great time to find out what you all are thinking, how I can maybe answer some questions and go from there. Does that kind of work? I feel like I just came in like a tornado.
That's great. I think that's perfect. So I think we want to maybe, Colleen, you want to spend about 10 minutes on questions and dialogue, and then you want to go into the networking?
That sounds great.
All right. She covered most of our prep questions. Does anybody, I have one question, but I'll ask the audience first.
And in parallel, John, we can have it where the audience wants to just message on chat, and you can ask your question first.
For sure. Okay. So type your questions in the chat if you have them. Kristen, my question is, for a solopreneur, for like a, really early stage, just starting out founder, how many hours a week or a month is this?
So I think for somebody just starting out, if you can use something like Expensify for your, even if you just start saving your receipts, it shouldn't be more than, an hour a week.
Okay.
Just take a look at everything. I think people end up spending lots of time more on trying to organize. Yeah. And that's why I think starting off early with even just a little app here in a spreadsheet is going to save you a ton of time. The reports come out are great.
Perfect. And then my part 2 of that is, once you're like 3 to 5 people, say it's your responsibility to do this, but you kind of have to get the other people on board, right? Everybody's incurring expenses and making decisions about the finances of this, baby company. Like, do you have any tips on how you coordinate? Like if you and Rich have a company together, like how are you extracting this information from him? Or you just have him really well trained?
Well, you know what? I think we've been doing this a long time. It's maybe the latter, but so one of the reasons why I mentioned Expensify is that this can grow with you. Okay. And I think when you start getting 2 or 3 people, Johanna, I feel really strongly that people should be meeting at least weekly to talk about these types of things. Okay. And they need to document. So if it's expenses, I think at that point you're like, hey, anything over $500 we got to talk about, or maybe it's over $50, whatever is for your company. And the thing about Expensify is that it's super cheap. So for like $5 a person a month, you're talking $15 a month. You can take a look at what everybody's spending in your company on real time. Okay. And you can easily set up in Expensify even classes. So, if it's a meal, all kinds of things. I mean, what this software can do is amazing. And so meeting on a regular basis and putting those processes in place is super important. But that's also why you're meeting once a week. You want to look at these things.
And just an alternate perspective, one of the things that we do is we just have all the finances actually go through one person. So anytime anybody is going to incur an expense, they ask for permission ahead of time. And then as soon as they've incurred it, they give the receipt over, and then we reimburse them, and then we just manage it all internally. So,
and you know what, and to me, that's just part of the process, I frequently see small businesses where you've got 3 big cheeses all running it, right? And
Yeah.
they don't want to talk to one person. Well, why can't you just trust me? And
Yeah.
so, but you're absolutely right. If you can keep it with one person, that would be great.
Yeah. And so if you do that early on, I think, centralizing that and and it helps as your roles are sort of evolving, right? As you grow as an organization.
Yeah.
To sort of be like, oh yeah, that person kind of has default become the finance person.
Well, yeah. And I think especially when you start setting up accounting software and actually track, expensing and credit cards, that's something a little different. But when you're actually keeping books, one person keeps the books. Okay. It's just because there'll be all kinds of interesting things that happen in there. Okay.
We got a question from Brianna. You see that? She's saying, should a small business start off with an income statement or balance sheet cash flow report from day one?
So I think that they very closely immediately start tracking your expenses. Okay. I think that's number one. But what you're going to find is when you start pulling these reports out of something like Expensify, you really kind of have a very basic, at least the expense part of an income statement. So I think as soon as you start getting revenue, you're going to want to set up something and start immediately looking at your income statement and your balance sheet, even if it's just very simple. And it's just to get you comfortable with it and to really see how your business is improving, okay, and where your weak spots are. I will tell you this, every company I've ever worked for or worked with, I have known more about how their company operates just by working in their finance department than sometimes their own operations people do, clear from how they set pricing and how they sell things to, how they pay their bills, where they're wasting money, all that kind of stuff. You will just be so much more powerful.
One of the things that I've seen is that just keeping track of your expenses sort of helps you with building your budget. So as you start thinking about fundraising, as you start to have revenue, people are going to ask you, how much money do you need? And if you don't know how much it costs to run your business, then you don't know how much money you need. And you might, yes. I think I need this much, but if you have real numbers to back that up, it looks really credible, right?
Well, absolutely. And one of the first things anyone's going to ask you is, how are you going to spend the money?
Exactly.
I need $100,000. Great. For what? And if if you're looking at your income and revenue, income and expense statement, and you see that you're not spending any money on marketing, guess what? You probably need help with marketing. There's no salespeople. You probably need help with sales. And then you can easily show them, hey, we've built this great app, but we need sales help. We need marketing help, right? Very common. I'm trying to show restraint because I can just talk.
I know you got opinions about all that stuff. Stephen, you want to ask the younger self question?
Yeah. So Kristen, you've tuned into a few of our Tech School episodes, so you already know this, but a question we like to ask a lot of our speakers is, so imagine you had a chance to talk to your younger self before the early stages of your journey as a founder. We know that you're, not only a finance whiz, but also a startup founder. So what are 1 or 2 tips that you would give your past self, given all the knowledge and experience that you know now?
So, it's funny. I was thinking about that. I think in the finance realm, I think I wished I had done more on my cash flow analysis, right? And my budgeting. I would say it's just in general as an entrepreneur. I think that I wish I had thought more about the types of partners that I brought on and the people who I had around me. So it's sometimes you bring on a partner and you have so much in common. You just love working together and you have the exact same skill sets, right? Or somebody comes in and they're like, oh, I'm going to help you out and I want a piece of your company and everything. And you're like, oh, cool, and forget it, man. Either somebody comes in with money you know, it's like, or you can pay them for their expertise, right? But be very careful about who you have around you and understand the professionals that you're hiring and understand who you are as a company. I think, you know, when I first got started, I'm thinking, oh, my little company, that's so great. You know, we make a couple $100,000 a year. So I need a finance and accounting team. And, you know, and I going to somebody, you know, one of these big, like a Moss Adams or something like that, we're way too small for somebody like that, right? You know, a local, you know, solopreneur, CPA or tax person would have been more than enough, you know, and I would have saved a whole lot of money. So, so those are probably a few things I would have done different. Maybe a few things I would have said don't do at all. So
we all have stories like that.
Yes, definitely.
So thanks for joining us today and for being our favorite finance nerd.
Thank you. I am fluent in nerd. And so, and you know what I'll do is I'm happy to at least give you the tips, the PDF of the tips and the finance statements. And you can make those available and distribute them as you feel. And thank you for having me on. You know, if this is something, if there's a particular piece we can talk about later, I'm happy to come back. You know, if you need me.
Yay. And thanks for really breaking down, you know, I did some research ahead of time of things, you know, financial mistakes that startups make, and a lot of it's really high level, like hiring too fast and things like that. And this is really practical. So thanks.
Oh, you're welcome. Thank you.
Okay, Curling, you want to?
No, I was just, no, I